And you can see in this map in all of Toronto, we have 172 projects that are going to be coming online or occupying starting in 2025, being this year, which is a lot of units. So if you look at this chart over here, we have 67,000 units coming online. That is a lot of units. Now, of that 67,000, how many are studio units and how many are one bedrooms? Which is you got 3,400 for studios and 2,600 for one bedrooms. So if we do the math on this and see how much as a percentage of this new inventory is coming online, we add these two up and you divide it by the total amount of units that's online. You're looking at 44% of these units are going to be small units. Now, just how small do you say? We're going to look at the average. So you can see down here, the average studio size in this set of data is going to be 398 square feet. I think we're going to have a little bit of a problem for absorption rate on the rental side and on the resale side. Toronto developers got it wrong. Micro condos are sitting unsold. Buyers want space and investors are bleeding money. The numbers are in and the market is sending a very loud message. Here's what's really happening and what needs to change fast in the Toronto condo space. Hi, my name is Zen, and if you enjoy my data-driven and number-crunching real estate updates, be sure to like and subscribe. So as the city condos market switches from investors to end users, the smaller units are having a hard time and they're not as popular right now. So what are the solutions for this problem that we have in the city? So let's define what a small unit is. And for most people, I would say it's probably something that's under 450 square feet, or what they call a junior one bedroom. And this is just an example of where you don't even have that one bedroom and it's just a studio. So you're getting effectively this box over here. And for context, it would look something like this, where from one side to the other of the room, you have about 11 feet and then your kitchen is on the wall. So it's very little room for you to even put anything more than just a bed. And there's a lot of these units that are coming online. So where did we all go wrong? Why did the developers build all of these units? And the answer is, these were the units that sold to investors. Because at the end of the day, the investors care about two things: cash flow and the price of the unit. So as the cost per square foot got higher and higher and higher, the only way to buy something that was, call it $500,000 or $500,000, was to make the unit smaller and smaller. So effectively, for investors, all they care was about the bottom line. Can I buy this thing for $500,000? Can I sell it later for $600,000? Or at least make it cash flow neutral with a lower maintenance fee and lower taxes? And that's exactly where the developers went wrong. They continued to cater to the investors without actually thinking about who would live in these units. And now that we have a glut of these units come online, and when the market is slower and the end users are the only ones around, where they're renting it or buying it and they don't want to live in here, they're going for the larger units. And we have so many of these small units coming online. This is where we have a problem, where nobody wants to live in these units because they were all built for investors to flip to the next investor. So the first thing we're going to address is that the hardest units to sell right now are often the smallest ones. And as per the Toronto Real Estate Board in 2024, only 20% of the condo sales last year were 0 bedrooms, so studios, or 1 bedrooms. The other portion, or 72% of it, were larger 2-bedroom plus. And I'm going to show you the data to back that up. This is a chart looking at the months of inventory, which is effectively a ratio expressing the number of unsold properties divided by the number of sold properties. And if you see this chart over here, it's going up. And when it goes up, it means it's bad. It means it's going into buyer's market. And to give you context as to how this number works is, if you remember back in 2021, when things were kind of crazy, your months of inventory was 3, which effectively meant that if you take 1 divided by 3, there's a 33% chance your property is going to sell. So when you look at where we are right now, we are currently at 14 months of inventory. So if I put this as a percentage sold every single month, there would be only 7% of the bachelor's unit that would actually sell. It's really, really bad. It's really, really bad. And to understand where prices generally go is when you're about sub 4 months of inventory. So let's say that line would be somewhere over here. If you're over here in this little box, that's when prices generally go up. Between 4 and 6 is usually when prices kind of stay stagnant, right? So this is kind of the balance market. And anything above that, realistically, you should be having prices come down. And you can see most of this chart I'm showing you right now is above 6 months of inventory, which means prices are coming down, and we are seeing that right now. Now, if I do that for the same thing for 1 bedrooms, it's not as bad, but it's still bad. So your current months of inventory is 8.26. So if we do that again in the form of what percentage of stuff is getting sold, you're looking at 12% of your properties being sold every single month, which is still not great, but it's not as bad as the bachelors. So showing you here, anything under this box is when prices were normally going up. This box over here is when prices should stay flat. And anything in this box here, prices should be coming down. So you can see we have so much inventory that prices should be falling down right now. And this is the problem. Nobody is buying these units. The reason that a lot of this inventory is building up is you have to remember this. We're changing from investors to end users being the primary buyers. And what they're looking for is totally different. So investors want small units that can lease out and it's a low price per square foot and rents are decent because generally the smaller the unit, the better your cash flow. But end users want more space. So that's kind of why it has shifted over. And because a lot of the investors are the ones that have owned units for a long time, you can see right here that the 1 bedrooms are getting less rent as well. And there's going to be a lot more pressure for rents to come down. And they're saying that from this data, prices have dropped 5.8% on the rental market. From what we see, I would say it's actually closer to 10 to get a good tenant and get it leased. And I'm going to show you exactly why. So this is the same chart I showed you prior, but for rentals. And you can see that, hey, how come months of inventory is so low, but why is Zen saying that actually prices are going to go down? And that's because you have to think about from a mindset. If you're an investor who has a property that's vacant, you're going to keep dropping your prices until you find that tenant that you want and lease it out. So now it becomes a race to the bottom when you have a lot of supply. So the inventory would generally stay around here because people still ultimately want to move, and because there's a lot less friction for you to move from one rental to another as opposed to buy and sell because there's no land transfer tax and there's no selling fees and no legal fees. It's much easier to pick up your stuff and move to another rental. So there's a lot of movement, but because of that movement, the months of inventory stays low. But what happens is when you look at the medium price, the prices are coming down. So this is for a 1 bedroom. And I've been saying since 2023, which is where we peaked at 2,500, you can see that prices have been generally going down. Right now we're at 2,200. So I'm saying it's a little bit more than 10%. So it's actually not great. And I foresee that we're going to continue seeing this way. And this is why a lot of our investors have actually looking at cashing in on the chips. If they made some money on the real estate market, they're looking to offload now because the rental market isn't looking great either.
Before you even think about selling, don't let another chatbot price your biggest asset. Your property is not just another number. Hit the link in the description below and I'll send you a personalized assessment with real data and expert insights so you can sell with confidence on your terms.
Now, if we look at just studio units, you can see the exact same thing. They were as high in 2023 as 2,300. And now you can see they've dropped to 1,850. That is actually almost a 20% drop in prices. And I think that's actually going to continue dropping. And that's kind of the challenge right now. So what are some solutions people are proposing to solve this small condo crisis? Well, people are talking about combining 2 units together. And while that may sound good on paper, it practically doesn't make much sense if you as a person are trying to buy 2 condos to do it. If you're a big pension company and you're trying to reconfigure the layouts and floor plans to do so, yeah, you'll have more luck because you're working in an economy of scale and you can change a lot of things that haven't been built out already. But if you're talking about buying 2 side-by-side condos, the possibility of that is very, very low. And I'll show you why. The first one is that smaller condos tend to sell for more price per square foot. So if you were to buy 2 bachelors, 300 square feet each, versus one bedroom, that's 600 square feet, your 2 condos putting together will cost you more because kitchen and bathrooms cost more than building out bedrooms. So that's why if you were going to buy 2 studio units and put them together, you might as well just buy a 1 bedroom. And on top of that, you don't actually have to combine the units together and talk about engineering plans and structural plans because I've gone through this with a client and it sucks. It's almost impossible to make something work for you. And on top of the fact that you're paying more for 2 smaller units and you're renovating it, you basically have to make sure that the unit adjacent to you is available to buy, which is almost impossible to time if you want to be in the same building. So it's not really feasible from an end user to combine 2 units financially or probability wise. So that's why I don't think this is a good solution for existing small units that are being constructed right now or have completed in the last little bit. Now, where do I think these small condo units are going to go? Ultimately, they're still going to get absorbed. People are still going to rent them. People are still going to buy them. But the question right now is at what price? Because if you take away all the solutions that people are trying to come up with right now, The only solution right now is you make them more affordable by dropping the price. And this is exactly what this person says. At some point, they'll eventually be sold and they will be rented, although prices have to fall substantially before that actually happens. So when we look at the months of inventory and try to understand how much prices are going to have to fall down, you basically have to get your months of inventory back down to the 4 or 6 months range, which is kind of like right here. So you're going from 14 months, call it, to 6, which is an 8 months of inventory change. So therefore, you have to increase the sales by 8 times. If you understand that, that is a very hard thing to do. And the only way to do that is you drop prices. To what magnitude are prices going to drop? I'm going to reference you back to this chart I used before. This is a chart that talks about what happens to prices based on months of inventory in the last 2 decades. Now, this is all for Canada, not just for GTA, but you can see we don't even have on the x-axis a number for 14. But let's say we go to the highest months of inventory, let's say it's over here closer to like 9.5, you can see prices should be falling close to 10%. Our months of inventory is over here right now. Can we see prices drop to 15, 20% for these small units? Yeah, I think so, especially because they've been sold at a higher price per square foot.
Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, but decades of experience to work for you.
And to understand the severity and the magnitude of how much inventory is still on its way, despite it being very, very high levels right now, we're going to check out the data for pre-constructions that are coming online. So you can see right now, we're going to look at data that is either completed or under construction, meaning that they're not going to change their layouts. So these studios and 1-bedrooms are coming online. And you can see in this map in all of Toronto, we have 172 projects that are becoming online or occupying starting in 2025, being this year, which is a lot of units. So if you look at this chart over here, we have 67,000 units coming online. That is a lot of units. Now, of that 67,000, how many are studio units and how many are 1-bedrooms? Which is you got 3,400 for studios and 2,600 for 1-bedrooms. So if we do the math on this and see how much as a percentage of this new inventory is coming online, we add these two up and you divide it by the total amount of units that's online, you're looking at 44% of these units are going to be small units. Now, just how small do you say? We're going to look at the average. So you can see down here, the average studio size in this set of data is going to be 398 square feet. I think we're going to have a little bit of a problem for absorption rate on the rental side and on the resale side. And your average price per square foot is $1,500 a foot, which is very high. Just so you understand, the average price per square foot in all of GTA right now is probably $900 to $950 for a studio space. Now, your 1-bedrooms aren't as bad. They're $542, which probably includes your 1+1, so it's not as bad. You can see that the average sold price per square foot for these 1-bedrooms, which includes your 1+1s, is $1,300 a foot. So you can see we're having a lot of small units come online. Almost 30,000 of them, of the 67, are going to be small units. And they're going to be at an elevated price point, anywhere from 20 to 40% higher than what the resale market is. And this is why I was saying earlier in my videos and in this current video that your small condos, your studios and 1-bedrooms, whether it's resale or stuff that's coming online, is going to underperform the market significantly. Your average months of inventory right now is around 4.5. Your small condos are in 8 and 14 respectively. That is how bad the small condos are performing, and they're going to continue this way. And even when the market recovers, these will be the last to recover. So this is exactly why in a previous video, I agreed with TD's outlook where there's a very good chance on average, your aggregate condo prices could come down by 10% because we have so much inventory in this small condo space that's pulling the averages down. And if you're wondering why TD, one of Canada's largest banks, also thinks that condos will not be performing very well in the next little bit, make sure to check out this video over here where they're predicting that the average price is going to come down by 10% in the next 1 year to 18 months. And I'll see you in that video. Until next time, your move, your future. See ya!